Bitcoin has just confirmed the 200 daily EMA as support, confirming that it's now in a daily uptrend or daily bull market. However, I wish it was as simple as this. We're going to go through this, of course, today with what is going on with Bitcoin and how actually potentially we could be on the verge of a 1 to 2 month dip. Although, yes, we are currently confirming that the daily time frame is now flipped bullish, gone into a bullish market because it's confirming the 200 daily moving average of support. We need to actually analyze this much further because this is only one confirmation and I need to see two more before I believe that Bitcoin could be on the journey to 30,000. So please join me in liking, subscribing, commenting. Thank you guys so much for helping me reach 5k. I'm going to be doing a free course giveaway. There is a link underneath this video to Louis Vibes _ over on Twitter. Please hit the link though, because a lot of people are struggling with actually finding me when they're typing it in. If you want a free course, head over there and follow me. More instructions will follow on the giveaway. But if you want to take action on the course or on the one-to-one mentorship, as you believe you're already somewhat advanced and just want to get to the next step as quick as possible in becoming a self-sufficient trader, you also get my community with both of these options where everyone is helping each other out. There's about 60 to 70 people in there helping each other out daily with trade ideas or investment ideas. If you want to be a part of it, hit the link under this. My Twitter, the Louis Vibes _ will get you started. But continuing on with Bitcoin over here, what we can see is the bounce off the 200 daily moving average. So it seems as we were struggling with the resistance over here, we see quite a big buildup of wicks over here as resistance as well as support. So right now we're running into that as resistance, understand that. So we need to push through this level. And without doing so, that is how we actually come back to the 200 and lose the support. So going forward, we have the wick on the 200. Let's just read out the low over here, L. Hovering over that now, 21,370, $21,370. We can't see price. The daily candles closing below that level. I'm going to zoom in a little bit more because I want you to understand, if you're not aware of what the closes are, the green closed there on the body. The green closes there. The green closes there. So the red closed at the bottom, the body, the bottom, not the wicks, but the body. And then the red closed there. The red closes there. The red one here, it closes there. So we can clearly see currently we're below this line over here. We need the closes to be above this line. I'm going to bring you more detail on the level specifically, but yeah, equally we can't close below that. So that would be that red body down here below. What was the level? $21,370. If we saw $21,365, that's a breakdown. So we don't want to see that. That could lead to a 1 to 2 month correction starting from here. So although this might just be a little dip to the 200 for us to continue higher to 24, 25, 26, 30K, we need to actually push through it because it could just be resistance to head back down to the bottom and continue lower, and we'll be on a journey much lower down. So let's start off by first using the Fibonacci's to see what's going on with this area with loads of wicks going up and down. That's the area of concern or the area of interest for me. So from the high to the low, it's actually the golden pocket. This is interesting because what the fibs are now telling me in actual fact is that this is just a retracement to key level of resistance for the continuation lower. So what we need to understand with the Fibonacci is that all it is a retracement tool, or in other words, in this case, a dead cat bounce tool. So it's having this big push down. Like, let's pretend, this is the bull market top. So we've just entered the bear market, but the confirmation of the bear market is if we fail to get above this, because the bull market continuation would be a push above this and break the high. That's how we get the bull market continuation. If this was the much higher time frames like the monthly or the weekly, and this was the bull market top and this was the bear market. If we want to continue now back into a bull market, you need to reclaim this level. But equally, if we fail to get above this level, this is where this was just a Fibonacci retracement or a dead cat bounce. And then we break the low, which we said we can't lose, $21,370. And that is how you actually head lower. And we have this dip that could last a month, 2 months. And what I mean by this is that already we can see here well over 7 candles. maybe even 14 already. Let's just count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 1 off 14. So already 2 weeks just being here. 2 weeks. So a further 2 weeks, that would make it a month, right? And then it will probably take a month to reclaim it. And the deeper we go, the longer this will last. The longer it will take to actually get back up. This is what I mean. So we don't want this to be a 1 to 2 month dip. We're already 2 weeks in this. And so what we want to do is just push through this golden pocket, hold it as support, and continue to 26K. 25K to 26K, 27 to 29K. Can you see 28997? We'll call that 29, and the 1414 at 30,000 over here. This could all be on the horizon very soon. This could be the immediate short term, in fact. Only if we break above this golden pocket, because this is what's keeping us bearish. Remember, the Fibonacci retracement tool is a tool that just says this is a push, this is where you come back to and retrace to, and then you just continue on your trend. Now, when I zoom out, and if this is going to be the case, well, in actual fact, we should have pushed, exhausted into here and continued lower. And it wasn't the case. We created the reversal wave by getting above it. So that's all we need to see here. Get above that one, create the reversal wave, and head up higher. This is what we're now trying to see on the higher time frames, where it looks like we're coming back down to the golden pocket. What could stop us is this 200 moving average. Now break above the other one, and we don't even need to revisit this. But if we now fail to get above this golden pocket, push under the 200 moving average. Remember the level? 21,370. We can't see daily candle closes below. That would signal a dump into the golden pocket. You can see the levels, 19,750. Nice psychological number. 21,000, we'll just call it another psychological number. And in actual fact, guys, you just need to hold this green box and you should go to 30,000, because this was a low, a 5-month low that we lost. We lost it. We should continue lower from there. We should continue lower. You put in a higher low. That's not what should happen. You should go lower than this low. And you put in a higher low and you reclaim that level. So we just need to confirm it as support to continue higher. You don't have to come all the way down to it. You just need to create higher lows, bullish structure above that low. We just need to stay above it. You don't need to come to it. You just need to stay above it. And if you do come to it, you must stay above it. That's all I mean by staying above it. Just need to stay above it. Doesn't mean you have to go to it. But if in the freak scenario you do go all the way down there, you need to hold above it as support, and we should continue onwards and upwards and break this high. So this is what I'm trying to get at. You see how we were holding here support and we went there? Well, we lost it. So if we ever reclaim it, we should go to there. And that's why we reclaimed it and went to there. So going forward, if we're holding this resistance, we should go back to the bottom. But what could stop us from going back to the bottom? And again, if you hold it, you're going back to the top. If you lose it, that's where we go down. But what could stop us from even going down there? Well, the 200 where we are now and this golden pocket over here. So this would what I would love to be the case. And I know that you bulls out there want that to be the case. I know the bears out there are just saying this is all BS, this move up. If it is BS, I'm more than happy to continue with price to continue going down, and we'll just keep buying our cryptos even lower. But it's not a guarantee anymore that we are going lower since reclaiming this low. So we need to see that being held. We need to see the continuation. We need to see this high being broken so we can head to 30,000. Now I'm going to draw you some key levels. And what if we don't actually get the close above this? What if we do close below? As we've got 10 hours and a half left and we are actually below. So yes, in 10 and a half hours, we could be down here. That's a big wick. That's rejecting. We want to continue down. Or in 10 hours time, you're above it and that's beautiful for the continuation up. So what actually happens if we hold this as resistance, but don't lose this low? So this is my next pointer. I'm going to now add a new Fibonacci. So I'm going to have to get rid of this one. I'm going to add my new ones. Now, this is hit and miss. Why I'm saying this? Because the current candle that I'm placing the 0 fib on is not finished. So this is why, as of right now, making this video right now, I must say that this is the top. Yes, in 10 hours and a half time, if we are a little bit higher, please do adjust the fibs to wherever the highest wick is, please. Otherwise, right now it's there. I can only go off what it's showing me right now, because otherwise, if I'm putting it up here, that's BS. Right now, I can only go off what is there. This is up my bottom. This is my top. In actual fact, I can come down. Remember, we can't lose 21,370. So from there, I'm going to draw a box all the way to the golden pocket, because if I were to very quickly get rid of this, from the bottom to the top, I've got my golden pocket. The Fibonacci tool measures a push. It says this is your retracement level before continuation of your trend. You understand that? So we can come down to here and continue with our trend. But we know we just can't lose this. As long as we're above this, we can actually stop this 1 to 2 month dip from happening to continue to 30,000, to 25 to 30,000. So going forward, I'm going to add that box again. We keep this box here now, draw it between 21.3 and 22.1k. And even if we dump into this area, it doesn't matter how deep, just hold the bottom of it. It doesn't matter if you just stop at the top of it. Just break through this golden pocket. So first confirmation that we're in a bull market on the daily time frame. Now that just means daily uptrend. So we've got the first confirmation. We've got a spinning top bouncing off the 200 to confirm it as support after breaking out and retesting it as support. Now we need to come up to the dead cat bounce area and break through that. Otherwise, this is a dead cat bounce and we do have a 1 to 2 month dip. But in actual fact, we can close below this, find support here, and then we must break above it. This is going to be the reversal wave creator. We can just do it now, break above, hold it support. But if we get rejected, I've prepared you guys, and we must hold this green area to continue back up. But again, if you lose this green area, we're going down, and these are your targets: 19.3, 20.9, 20.5, 20, and 19.3, 19.5. These are all targets. So if you lose this golden pocket and the 1 fib level, confirm it as resistance. This is how you head down to these levels. Even if you come down to him, bounce, I don't care, because this green box, I'll make it red once it's lost. And then so even if you pump to the top of the red box, green box for now, you could still head lower to these targets. So it's a long journey down, guys. We don't want that to be the case, because I want the end goal as much as you guys, if not even more. I just know the reality. I'm not ignoring the reality like most of you guys unfortunately are, because you just want to listen to the bullish way, or you just want to listen to the bearish way, where in actual fact, we need to listen to both ways, and we actually don't want to have a bias. We want to have a bias for reasoning. So we are above the 200 moving average. That means it's bullish, but I know I'm not going to get tricked as easily. We have a big push down. This is about halfway. Usually that's a dead cat bounce scenario, and then you continue lower. Only when you push through, I need to be shown with my eyes it is above the gold box. If it's not above, if it's not showing me it's above, it's not going up. If it's showing me it's above, hold its support, we are going higher. I hope this video today was super duper clear for you guys. Please do support the channel. Let's go for 6k as quick as we can, 7k, 8k, 9k, 10k. But yeah, make sure you enter the giveaway for a free course over my Twitter. Hit the link, because you're not going to find me otherwise. Hit the link underneath this video in the description down below, where you can also private message me for a course if you think you're more advanced, for mentorship. And with both, you get my crypto community Discord with over 70 people in there. Thank you guys so much for tuning in and supporting the channel. Like, subscribe, comment, turn the notification bell on, and I'll see you in the next one. Peace.